it's very clear to everyone that the rules of the game are not benefiting everyone equally. And so instead of trying to play that game, why not just find a different game? And so I do think absolutely, like, I don't think there's any contradiction or mutual exclusivity between being interested in the potential of these technologies and the use cases they're trying to explore, and even identifying where you think they're on an interesting path, and also being able to recognize that part of the explosion of them has been driven by this set of contextual factors.
Imagine spending an hour with the world's greatest traders. Imagine learning from their experiences, their successes, and their failures. Imagine no more. Welcome to Top Traders Unplugged, the place where you can learn from the best hedge fund managers in the world so you can take your manager, due diligence, or investment career to the next level. Before we begin today's conversation, remember to keep two things in mind. All the discussion we'll have about investment performance is about the past, and past performance does not guarantee or even infer anything about future performance. Also understand that there's a significant risk of financial loss with all investment strategies, and you need to request and understand the specific risks from the investment manager about their product before you make investment decisions. Here's your host, veteran hedge fund manager Niels Kostrup Larsen.
A new world order is becoming clearer by the day, and in our Global Macro series, I, along with my co-host Jem Kazan, want to dig deep into the minds of some of the most prominent experts to help us better understand what this new global macro-driven world will look like. We want to explore their perspectives on a host of important issues and hopefully dig out nuances in their work through meaningful conversations. Our guest today is someone that spends a lot of time in the crypto space. And in fact, he runs the best-known daily podcast on the topic. But he's also a really deep thinker on a lot of other topics, looking for some of the major global and social power shifts that the world goes through from time to time. And that is what we're exploring today. So please enjoy our conversation with Nathaniel Whittemore, also known as NLW. Nathaniel, thank you so much for joining Jem and I today for what I'm sure will be a wide-ranging conversation where we try to make sense of an increasingly uncertain and confusing environment as part of our Global Macro series. Now, since a lot of our listeners will know you as NLW, who each day provides the world with the latest stories and news from the world of crypto, I very much look forward to hearing how you are coping with the fast-changing flow of big events in that part of the financial system, but I'm also very excited to hear how you are assessing the bigger global macro forces that are in play at the moment. But since this is your first time on our little podcast, perhaps I could ask you to set the stage and provide a little bit of context for our conversation by just telling us a bit of your background and maybe share a few highlights that shape the path to where you are today.
Sure. Well, first of all, it's great to be here. Super looking forward to this conversation. I say on the Breakdown every day, which is my daily podcast, that is a show about big picture power shifts. And so I think if you're into that and you're kind of interested in that set of things, paying attention to what's happening in sort of global macro, in geopolitics is pretty essential, even if, as is the case for the Breakdown, you kind of hone in on a specific piece of it, which in our case is the breakdown in the crypto industry. I've been interested in these sort of big picture power shifts forever. I was an undergrad at Northwestern, spent my time there building a design center for students who wanted to go out and change the world and trying to help them do it better. That led me to Silicon Valley, working with a company called change.org and down a path of kind of how technology could be impactful to global problems. And eventually, a long kind of ways later, that's what actually got me into Bitcoin and the crypto space, was thinking about it in the context of the Sudanese refugees I had worked with in Cairo when I was a student, and what it would have meant to have a store of value that was sort of transportable harder to censor and capture, et cetera, et cetera. So I've always kind of been, the through line is pretty clear in terms of kind of interested in how the world changes and what forces are shaping it. For the last 5 years, I've been exclusively kind of focused on the crypto space, both in terms of content creation, but then also in terms of consulting. So I've worked with tons of different companies on kind of communications and strategy and things like that. And today split my time between the Breakdown podcast, which is a daily, as we talked about, and helping FTX, the crypto exchange, with marketing and strategy. So excited to be here and chat about anything you guys want to chat about.
Yeah, no, absolutely. We are very, very excited to have you here. Now, it's hard not to be emotionally invested in what's taking place right now, both in the crypto space, but also in all the narratives and expert forecast as to where we are heading in terms of the global economy. And no doubt, we are witnessing some of the big power shift that you're referring to in social change. And I know this is part of what you studied, of course, but perhaps you can share with us what are some of the examples that you see right now in terms of the shifts that are playing out at the moment, and maybe we can then dig into some of those a little later in more detail.
Sure. So, I mean, this is kind of the type of question where you're really just asking, where do you want to start, right?
Right.
There's a layered set of things that are going on right now that you could it's almost a Russian nesting dolls of these big power shifts, right? The most acute one that I think that we are all in the immediate context of, that is affecting the day-to-day, is a shift from a very accommodative, kind of loose, open or easy monetary policy over the last, decade since the global financial crisis, into something that feels like it could be a more fundamental shift, right? The removal of liquidity from the system, a kind of a resetting. Now, to what extent this is actually a secular shift, a reset, versus a temporary stop on the way to having to go back to something that is still structurally accommodative based on debt to GDP and all these sort of things that you'll see people talking about on financial Twitter, is, I think, an open question. But there's no doubt that right now, in terms of what's happening kind of day to day in the markets, that is the big thing that is shaping everything else, right? That's the context that everything is operating in. So what I'll do is just a sentence on the zoom in and the zoom out, and then you can take it wherever we want from there. I think on the zoom in, the way that is impacting the Bitcoin and crypto space is sort of two parts. It's helping unwind or force unwind the leverage that has built up over the last couple years, where that industry has kind of really taken the extremes of kind of all risk assets and put them into a new place. And I think in some ways what we're discovering, or what we will be discovering over the course of the next however many months or years, is what this industry looks like in the context of a shifted monetary policy environment. And then I think if you zoom out a level, there's obviously much more going on than just Fed policy. There are sort of fundamental realignments and changes as relates to the shape of the world and geopolitical relationships and trade policy and our expectations around conflict and energy. And so, there's sort of almost on any level, you see kind of us being in this very uncomfortable, in many ways, liminal period.
Yeah, no, completely agree. And you raised so many interesting points that I think both Jem and I want to dig deep into. Before, Jem, you jump in, something that I picked up today from Lynn Alden's latest research paper, and maybe this is something you've thought about as well, Nathaniel, and that is, I think a lot of us think that central banks are a little bit in a jam right now, and she describes it as being chess mate, kind of, that's where you are in at the moment with many of these central banks. And then she introduces this idea of maybe the only way they can get out if you start playing some kind of team chess. And what team chess is, that you are now starting to rely on other things to happen for you, say the Fed, to be able to even get out of this jam, whether that be, the Ukraine war coming to an end, and maybe that takes the pressure off inflation, or something else. And I wonder if you kind of share that idea that actually a lot of these central banks are completely without any tools left in the toolbox, without something outside of their control happening to help them out of this situation?
I think that there are a couple things here. And maybe the starting one is our sense of what their power actually is in the first place. And maybe that is misaligned. One of the challenges of always on, hyper persistent media in the financial context is that all of us who are producing content day in, day out always have to kind of find the next story. And I think that has exacerbated the sort of Fed watching propensity that we have in markets. And to be clear, this is not without the Fed's sort of awareness of that fact and leaning into that fact, right? The Fed, I think, has a sense that the biggest tool in its toolkit is in many ways the forward guidance that it gives. However it wants to define that. And I think there's obviously the sort of official forward guidance that comes, after the meetings. There's also the unofficial forward guidance of when they very kind of carefully calibrate how hawkish or dovish they are in between comments that they know are going to get amplified through a million channels and a million discussions. But they are in many ways in the business of self-fulfilling prophecy. The more that they can drive markets where they want them to go without actually having to make changes, the better off they are. And so to the extent that we recognize that a lot of their power is sort of in the realm of marketing and PR, I think it would potentially give us a slightly different take on looking at actual monetary policy and what it can do. So I think that there's a dimension of this which is just the sort of not even the emperor has no clothes, because the emperor is kind of telling us that he has no clothes, but we still expect him to be all powerful. If you look at Chairman Powell's comments over the last year, every single time he speaks, he tries to remind people of the limits of Fed power. But it's always reported as like the 18th bullet point, right? And it just doesn't matter that he keeps trying to say, we can't control supply chains, we can't print more oil, blah 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 blah. I think that it is relevant though. So going to kind of Lynn's notion that something exogenous is going to happen for inflation to unwind, I think that it's very likely true. The Fed's only lever in this case is demand destruction. And we have an inflation that is, yes, I think, caused in part by demand, that was about fiscal policy, not monetary policy during kind of the COVID era, but is also largely driven by, the exact sort of structural dislocations that they were using to claim transitory, right? Like the problem with the transitory argument wasn't that they were wrong, that this was driven by the unprecedented challenge of global supply chains shutting down and having to come back online, meeting unprecedented demand after people who kind of en masse had been locked up for 3 months. The problem was that they used a word that suggested a time bounding to that, right? They called it transitory rather than, whatever. Find a better buzz term that doesn't put them on the hook for, 6 months or 7 months. And so they were kind of just hoping that it would unwind itself before they were caught with their pants down, and it didn't, So the problem wasn't, I don't think, a total misdiagnosis of where the inflation was coming from. It was the politics of putting that word transitory and its implications of time around it, and they just ran out of time to allow it to be transitory. But I think that still, even now, they are hoping that they were right about that in the first place, and that supply chains kind of fixed themselves,
Yeah, no, I love how you phrase that and frame it actually, because it is not kind of a black and white issue, even though it's often made up to do or to be that when they talk about how the Fed used the word transitory and so on and so forth. Jim, jump in here. What's on your mind?
I'll dive in right on that transitory point to start with. The Fed, in my opinion, never thought inflation was transitory. That was them trying to use the tools, the few tools that they have to try and talk down the long end of the curve. They wanted the market to believe that it could be transitory. So long-term inflation expectations came down. They weren't wrong. They were just, their tool didn't work. And now the next tool is, whatever it takes type language, right? And so I think people misinterpret that they were wrong. I don't think they were wrong. I think they were trying to do anything they could to keep down that long-term inflation expectation. And I think we know why that long-term inflation expectations are critical. That's the death loop, right? If long-term expectations of inflation go up, everybody starts building inventory. People start bringing demand forward, which drives more inflation. A and B, if they can't keep real interest rates negative, if long-term interest rates if long-term inflation is high, because ultimately then you can borrow at negative interest rates, invest in real assets, leverage it up, 4 or 5x, and that only pushes inflation more as well. So there's this massive death loop that happens if long-term inflation expectations go higher, and that's what they're, desperately trying to solve for. I agree 100% that the Fed, with Lynn and you, I think is what you're saying, that the Fed, the emperor has no clothes, in a sense that there's not much they can do. This general understanding that the Fed is all powerful. It is all powerful when it comes to supply side economics. They can give money to corporations and wealthy individuals and fund investment in the business, in the world, in the economy. They are the only entity that can do that, ad infinitum. But when it comes to controlling demand, they have very few tools. Monetary policy can only, through secondary effects, essentially control demand, and those have a massive lag, and they're akin to dropping a bomb on a forest to clear the underbrush. You can, at the end of the day, take money from corporations, and in theory, there's some type of trickle down, way less than there used to be when we were a much more labor intensive economy. In theory, there's a wealth effect because, the people own stocks, but few people at the bottom who actually buy goods own those stocks. So it's their ability to control demand is incredibly low. And the problems that we mostly face are a function of demand. If you think about it, we have had a deflationary environment for almost 40 years, particularly the last 20 years, because of monetary policy. So this concept that in taking monetary policy away, we're somehow going to create deflation is, it doesn't make much sense at the end of the day. They're actually removing supply from the market by reducing money available to corporations that create supply. So I couldn't agree more. The Fed has a mandate from government to control, price stability, but they have almost no tools in this current economy to do so. Government ultimately, fiscal policy controls those strings. And importantly, they are subject to the whims of populist people, of the people. And I think that's the core point here, is populism. So anyway, that's my little diatribe. But question to you, I think I'd love to dive into in terms of crypto is, the Fed is the creator of crypto in my mind. They created a monetary policy that made it unfair for the labor class, in particular millennials on down, to save money, to earn money. There was 1.75% real GDP growth for 40 years. 1% of that 1.75 went to the top. We've had massive wealth inequality, massive generational wealth inequality. We've created a technological revolution. Millennials on down believe that technology can solve all of our problems because that's what they've grown up with. A technological revolution, which has been driven by monetary policy. On top of that, millennials on down haven't had money. They haven't had a nest egg. They've had to catch up. So it's a matter of betting on, convex bets. So crypto embodies all of that. It's a religious zeitgeist, in my opinion, of this generation. I'd love to hear your thoughts on where you see, you are our first millennial guest, right? I'm on the border, but we're the boomers, right? In crypto speak. So let's have it out. Let's hear a little bit about kind of your thoughts on the future of crypto and the role and importance that you think it plays, and whether or not you think monetary policy is weakening and ultimately removing of this technological push from sending money to government, to companies, as well as the balancing of, through populism of rebuilding the middle class will ultimately remove some of the demand for what crypto is. I'd love to hear your thoughts.
Sure. So, I mean, so many pieces to dive in. I think it's one of the things that you actually open up, though, that is really nice because there's not usually this type of space created, is crypto is such a contentious space that normal discussions fall into this, it's this or it's that. And I don't like this thing, so I hate the whole thing, or I don't like the people who are involved with it, so I hate the whole thing. Or on the reverse, you don't like us, so screw you, like we're not, that is honestly the state of the discourse. And I think that just to tease apart a bunch of pieces. So you were kind of talking about why this set of things has found such a ready and open audience, right? Which is a really important discussion. Also a discussion that is separable from what types of value propositions a non-sovereign currency might have in the world. So let's actually hold aside. Actually, let me start with my fundamental case and why I think it's interesting. There are two kind of sets of problems that these technologies, broadly speaking, are exploring addressing. One is just the relationship of money and all of the properties thereof and state. And this is a problem that exists much more in the context of emerging markets, authoritarian governments, right? Where, I mean, this goes back to kind of what I said. Like I was working with Sudanese refugees in Cairo in 2004, and obviously Bitcoin didn't exist back then. There was nothing like it. The choice to flee, across that many miles and desert, because of the authoritarian regime you were under. And by the way, that wasn't the only place I spent time in. Uganda, Rwanda, Israel, Palestine, the Balkans. I was kind of very interested in doing conflict reconstruction things. And so to me, it seems quite obvious that a kind of global store of wealth that is not connected to a state has really interesting and powerful properties. Now, whether that will be hyper valuable to the American middle class or anything else, like obviously a lot of the folks who are super adherents in the US are focused on kind of the inflation, fighting use case, whatever. I think that in general, digital worlds are going to compete with kind of governmental jurisdictions, and in times of great upheaval, having these sort of alternatives outside of the state system is going to be something that is very hard for me to see how that doesn't persist and continue to be explored. So that's one whole kind of set of things that I find interesting. Now, there's this whole other aspect of cryptos, which is obviously a major point of contention between the Bitcoiners and the Web3 kids, you might call it, where what the crypto crowd is interested in exploring is a different architecture for the internet and a different set of incentives. And so this is sort of, I guess it's the Ethereum and smart contract kind of side of the house, although it gets blurry. But effectively, what a lot of the applications in this space are exploring is how you redesign networks that are so powerful, right? How do you solve the problems of big tech, which has this sort of bell curve that happens, or not even really a bell curve, but a curve that happens where at the beginning its incentives are super aligned with its users because everyone wants the same thing, which is more users, right? If you're in a social network, each new node on that network improves the network for everyone. But at some point, you can't really grow laterally anymore. You can't grow in breadth. And so at that point, the sort of financial imperative of the owners of that network starts to take over, and they start to need to extract more from each individual node in the network versus just expand those nodes out. And we've seen this over and over again across all these different platforms. And in the process have created these super powerful things that, honestly, they aren't even really like corporations in many ways in terms of their influence on society, which is why we have no idea how to deal with them. We have no idea what the right set of approaches to curtailing that power are and what we can even do. And so there's all these kind of big questions around big tech, and there's tons of builders in Web3 who are, interested in exploring that. And there's lots of different dimensions to it. Some of it want to go straight at that, architecture of the big social network platforms kind of problem. Some are looking at it in a more, a smaller context of sort of the value of creators and art. And that's where kind of the NFT stuff comes in. Anyway, the point of all of this is that there are a ton of things that people are trying to build to explore. I would say from the standpoint of having humility, like any technology, it is not a foregone conclusion that the new thing that you build just because it's new gets to beat the old thing. Right now, if we look at tokenized social networks, for example, not only have none of them even come close to beating one of the big tech kind of social networks, they haven't even attracted anything resembling kind of minimum viable interest for people, right? And that doesn't mean that their architecture is wrong, but they're coming into a world that has profound network effects all around on these other platforms, right? So that's a big open question. Now, I would argue that when it comes to sort of the creator economy and some of the new stuff being explored with NFTs, again, it's a very open question, but at least you're seeing much more traction there in terms of the value to artists or creators for what they do versus sort of aligning themselves with a traditional kind of platform. Point of this is all to say that all of these different use cases are at very different points of kind of understanding their viability and continuing to figure out where they're going to land. But then there's this other dimension which you got into, which is why there has been such radical uptake from all sorts of people around them that don't actually care about any of those use cases sort of intrinsically or on a personal level or whatever, for whom these are primarily speculative assets. And I think one piece of this is just the introduction of digital scarcity that Bitcoin created, either nominal digital scarcity, right, creates the potential to financialize and monetize everything. And to some extent, like part of the interesting, the way that the crypto industry has played out is what it looks like to try to build technology when everything is monetized from day one and highly liquid from day one. And that's a really weird new force that we're clearly still trying to grapple with. The second part, though, which is not just sort of a byproduct of the technology, is the sort of sociological context into which it comes. And I do think that you are right to assess that there is some combination of opportunism, of frustration, of cynicism that also contributes to people of millennials and Gen Z saying, to hell with the rules. We want to be able to kind of get involved. We want to be able to find the next thing. We don't want to be cut off from opportunity. And the opportunities around us are not cutting it. The savings accounts aren't cutting it. My, houses seem out of reach, blah, 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 right? The standard litany of complaints that people have. But I think it exists or operates on an even more subtle level than that. I don't think it's just people who are mad, like in an explicit external way that they can't afford a house, that are interested in these things. It's more just, it's very clear to everyone that the rules of the game are not benefiting everyone equally. And so instead of trying to play that game, why not just find a different game? And so I do think absolutely, like I basically I'd put it this way to try to sum up and shut up for a second. I don't think there's any contradiction or mutual exclusivity between being interested in the potential of these technologies and the use cases they're trying to explore, and even identifying where you think they're on an interesting path, and also being able to recognize that part of the explosion of them has been driven by this set of contextual factors.
Yeah, I think this is, you bring up an incredibly important point. And I think this is a thread we're probably going to pull on for a little bit throughout this, is there's really two separate parts of crypto, right? There's this populist, which I call fairness, equality, piece, right? Wresting control from the powers that be, which is very idealistic and really in my mind is crypto, right? And then there's the technology piece, which is blockchain, and you can go, Web 3.0, whatever else, right? And I think it's absolutely clear that the technology has incredible ramifications for the future that we are going to live in a million different ways. Whether the crypto, the currency part is relevant or not, I think is a major, major question. I think that is a function of populism and speculation, a lot of things. And those two things are, not the same thing. And actually, and I think this is an interesting point, in a lot of ways, people don't realize they are diametrically opposed. The technology itself is powerful because it creates control. It creates the ability to understand and label everything, right, in an immutable way. That control is in diametric opposition to the freedom that people believe that they are going to get through this technology. The story of money for 30,000, 20,000 years since the beginning of money is it is not just a tool, it is a tool of power. It is a way to control things and purchase things and exert influence. And at any point in history for the last 30,000 years, those that are powerful will use the currency and they will become the sponsors of it. And they will provide a good to the people below who are less powerful, but in return, they will maintain power. And so I'm afraid that crypto actually is going to have the reverse effect. And I think the logical conclusion is that it would, and that an incredibly immutable currency with the ultimate control is ultimately will be commandeered in the form of digital currencies. We're already seeing it. 90 countries in the world have already started processes towards developing digital currencies. And once that's there, I don't understand how, crypto, as it's currently envisioned as this populist uprising, can avoid, the technological benefits will be distributed through that into currency, and we will see the technological benefits in other parts for blockchain. But that important point, I think, is something that's not talked about enough. That ultimately, that crypto and this populist belief that it is going to free people from the constructs of power in this world is an ideal that is driven by this populism, and that ultimately the technology, it may be incredibly valuable, likely is going to change the world in a lot of ways, but that is not crypto. Anyway, I think that's an interesting point. I'd love to hear your thoughts about that.
So there's a lot of really good stuff in there and important things. I think it's actually a little bit more nuanced than this, though. So first of all, I think when we talk, so cryptocurrency, the fact that it's called cryptocurrency creates almost a problem in terms right from the get-go. So if you look at the set of kind of the internet disrupting Web3 type applications and what the job of tokens in those ecosystems are, they're really not money, and they're not trying to aspire to be money. They are value indicators, and they have kind of this financial value, but their function is as a proxy for value inside the network, or as some sort of pseudo equity thing. Like, this is the stuff that people like, by the way, this is why it's very confused on all of the sort of things that are not explicitly trying to be money, because they're just weird and no one knows exactly what to do with them or make of them. Right. But to be clear, like, what is, an NFT is not aspiring to be money, even though it has value. But even if you go to kind of, a smart contract platform, they use their token as sort of the basis of the ecosystem. They get fees for using their network in that, and hopefully it has value, but they are not aspiring to displace, the world currency in some way, as something like Bitcoin is. Bitcoin has a very different type of ambition, right? I think everything that you said and sort of applies from this sort of populist ideal, certainly to Bitcoin. And now for some folks, particularly in Ethereum, they have similar visions for Ethereum as the folks in the Bitcoin community do. But really outside of that, I don't necessarily think that I see the people who are invested in Solana, Avalanche, Polygon, etc., really feeling like that's what they're trying to do. And I only bring that up because I think it's an important distinction that is worth keeping in mind. The second part, though, or another part of what you discussed, is the CBDC versus sort of Bitcoin thing. I do think that there is a real question of what the upsides versus the downsides of central bank digital currencies. I think it's very clear, and I think we have dramatic examples of this in the fact of how quickly China is racing to create their own CBDC with the digital yuan. The objective is quite clearly not to be this sort of utopian value generating thing for citizens by reducing transaction costs and simplifying things. And you can tell this because there was a two-stage crackdown in China on the path as CBDCs ramped up. The first was what was actually scary in practice to them, which was the Alipay and WeChat Pay and these things, which were used sort of all over the place. There was this dramatic moment when Ant Financial was supposed to go public in the US, would have been the biggest IPO, I think, or people expected it to be the biggest IPO in history. And all of a sudden it was canceled. And then Jack Ma was gone for like 3 months, and he made, one or two very small appearances. And then they announced that Ant Financial was being restructured to be effectively under the regulatory regime of the banks in China, right? The state-owned banks. And so that was absorbed, right? This thing that was a private version of money, even though like those companies they never had the aspiration or the narrative or the messaging of anything like a Bitcoin. They were functionally competing with Chinese state-run banks, and China totally absorbed them, right? That they got so far and then no more. Now, after that was cleaned up, that's when China in 2021 started coming for Bitcoin in a much more aggressive way. First the mining ban, and then the trading ban, and then basically a prohibition on even working on those issues. And so again, this is like it's quite clear, regardless of what you think of a Bitcoin, the targeting of that kind of utopian or populist ideal by a regime that is quite clearly known to not want those things gives you a good picture of one side of CBDCs. The CBDC conversation in America is pretty fascinating. And even as regards sort of this point about whether something like a Bitcoin and a kind of a digital fiat can coexist. Because what you've seen, so if you just look at CBDCs as central bank versions of digital fiat, China is by far the farthest in terms of the development. However, if you include in your sort of discussion of digital fiats, US denominated stablecoins, USD is the king of that hill as well by a huge amount. The amount of usage of Tether and USDT and USDC is so radically beyond what you're seeing with the digital yuan. And the fascinating thing is, if you watch how the policy discourse in the US has shifted, there are a fair number of folks, both right and left, who are kind of looking back at the history of US financial innovation, seeing that it's always an interesting dance between, private market innovation that gets absorbed into the public system in some sort of, official ways, and saying, well, is there a way to absorb this superstructure of, US denominated stablecoins in a way that isn't just the Fed issuing its own CBDC? So I think that the range of potential outcomes with central bank digital currencies is fairly wide. I agree that they have huge surveillance and privacy implications, even if you are just adopting a USDC as sort of the official US digital currency. It still has those challenges when it comes to how the rules are written and how the rules are followed, in terms of how cash-like and privacy preserving the instrument is. For my take, though, I don't believe that the existence of a CBDC diminishes the use case for Bitcoin. I mean, maybe for the average person who just wants functional flexibility, but they're already using US denominated stablecoins for that sort of thing. I think that it reinforces this very sort of, it might be a niche role, but it's a really important niche role that a non-sovereign currency has. But there's a lot more to explore there too.
Yeah, I mean, at the end of the day, you get the technological benefits from a US, from a digital currency. Then you're left with this freedom element, right? This fairness, this extra governmental, lawless kind of, libertarian, for lack of a better term, thing. And the question is, will governments allow an extra governmental, lawless thing to exist? And I think that's its true kind of value once the digital currency exists.
I want to try and throw in a couple of more basic questions than this discussion, but I do think that it's relevant. And that is, I hear both of you talk about that Bitcoin kind of was created because of the 1%, the 1% owning everything and the unfairness and inequality and all of that. So, and I don't know exactly where this chart came from. I found it on in a tweet feed today. But it's probably from one of the big Bitcoin exchanges. And it says that 4.11% of addresses own 96.53% of Bitcoin. So my question is very simple. How is that different from the 1% owning most of the traditional assets? If 4% can own 96% of Bitcoin, how does that make Bitcoin world more equal?
So two parts of that. First is the more functional or kind of easy one. So I don't know the specific chart that you're looking at. Whenever those charts are shared, the wallets that are the dominant ones are exchange wallets that are basically the collections of their customers' assets. So it doesn't actually reflect the true distribution. I think since we're in like, let's have the complex and candid version of the conversation versus the sort of, soundbite version of the conversation, I do believe is an appropriate discussion to have, and that Bitcoiners should have it too, around Gini coefficient and like the concentration of ownership in Bitcoin and what it looks like. There's tons of sides of that debate. And for some people, it starts and ends on how it was allocated at the beginning. And if people got there first, that's sufficient and fine. Other people aren't so comfortable with that. And they say, if you're just replacing one class of billionaires with a new class of billionaires, how does anything change? I actually am hugely in support of that discussion happening. I think it does nothing but make Bitcoin better for having that conversation. But unfortunately it's always reduced in some ways to the exchanges where a lot of the Bitcoin lives hold all of the floating supply. There's a second part though, I think, which is important, which is that it's not necessary. So the biggest reason that we have narratively ascribed Bitcoin with the ambition to kind of disrupt the power of traditional financial institutions is obviously that the line that's embedded in the Genesis code, Chancellor on the brink of a second bailout for banks. And also, the sort of, there's clearly a sound monetary philosophy that went into the way that the monetary policy was designed. So it's not a stretch to read that critique. I do believe though that we imbue a lot of that narrative upon it versus sort of it was like clearly there from the beginning. If you remember, Bitcoin was the latest and only successful in a series of projects whose core goal was to solve the double spend problem and actually create a system of money on the internet or value exchange on the internet that didn't rely on a trusted third party. And tons of projects had come before that from lots and lots of different political perspectives. Now, certainly there's a through line in a lot of those political perspectives, but there is, going back to sort of early parts of the conversation, just a really important problem to solve for the sake of kind of internet value transfer that it was solving. It happened to come in a package of fixed monetary policy that was sort of unchangeable and an inherent critique of the sort of human mandated or mediated monetary policy. But I worry often that we speak in terms of absolutes with these things. Bitcoin is this. Bitcoin is what the community of Bitcoiners decide that it is. Now, the community of Bitcoiners is fairly loud about certain of these principles, so I don't think that's a wrong assessment. But it's not an immutable thing.
No, absolutely, and I do appreciate that you clarify that there's definitely a risk that some of these stats are not really telling the full story. So I understand that, and I have a few more questions about that, which I'll come to later. But before that, just as a small follow-up, just another thing that kind of puzzles me a little bit. And as you can tell, of the three of us today, I'm the one who knows the least about crypto, that's for sure. But we hear often about these hodlers that are never going to sell. And there's no doubt that it seems to me that they do control quite a large portion of Bitcoin, at least. But then again, I'm also kind of puzzled with, okay, but if that's the case, who is it that are selling and that can cause Bitcoin dropping 75%? I mean, so I guess my question is, my suspicion is that on one hand, we hear hodlers never wanting to sell or saying that they're never going to sell, and that's why it's going to continue to go up. But I wonder if that's really true, or if and I have no idea if there's any ways to see that in the blockchain, but whether that's really true, or actually when Bitcoin goes high enough, they definitely are, lightening up on their Bitcoin. I mean, I'm sure some of them are not. Preston Pish, for example, has been out saying this week, I think, that he's not sold any Bitcoins, but he is stacking cash at the moment, but he's not selling any Bitcoins. So I don't know. I'm just curious. So maybe you can enlighten me a little bit, Nathaniel.
Sure. Well, let me take this question in a couple ways. One is, specific to your answer around hodlers. I think that I believe that there is a base of folks who have this incredibly high long-term conviction on it, but they more set the price floor wherever it ends up being each cycle than have any real kind of deterministic impact on anything that happens outside of that, right? If you have this very, strong base of high conviction that represents some part of the supply that is just not going anywhere, that is a force kind of on the bottom side. Now, the place to take this conversation is how the dynamics of Bitcoin ownership have been changing over the years and what that looks like. And this is an important question, even going back to your last question, right? Because you kind of want, I think, if you're a Bitcoiner, some combination of that high conviction long-term hodling, but you also want a mechanism to distribute Bitcoin out to new people who come into the space, right? That's how you solve questions of concentration. By the way, there's a really kind of fun little aside because we just had Bitcoin Pizza Day not that long ago. So Bitcoin Pizza Day is obviously a celebration sort of Laszlo, who's an early Bitcoin miner who spent $10,000 to buy two Papa John's pizzas. And in point of fact, he actually did this a number of times. He had this offer up on Bitcoin Talk. No one took him up on it for about 4 days. Finally, someone did. And then over the next month or two, he did this about 10 times. He spent about 100,000 Bitcoin into this. Now, interestingly, Laszlo was one of the first people to mine Bitcoin with the GPU. And Satoshi was sort of pretty vocally against GPU mining at that time. He thought it was sort of over presaging, it put too much pressure on the network, it had too much concentration, and it's entirely speculative. But Satoshi and Laszlo had a back and forth, in email. And one of the theories about why this sort of pizza thing happened was it was Laszlo's way to redistribute some coins that he had been GPU mining back into the ecosystem because he had gotten too far out ahead. Anyways, the point of it's a fun little aside because I think these questions are relevant in terms of what the long-term base of Bitcoin holders looks like. Of course, over the last 2 years or so, I guess almost exactly 2 years now, the biggest shift in the base of Bitcoin holders has been the actual introduction of institutions. For years we were waiting for the institutions. They were right around the corner. They were always, just there coming. And Bakkt launches in 2018, and it's going to be the thing to get us out of crypto winter. Guess what? It was not. But once you saw Paul Tudor Jones publish his great monetary inflation thesis, and then a couple months later, you had started to see other hedge funders get in, and then you had Saylor's MicroStrategy buy and blah, 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 blah. You'd really had this sort of like a mass introduction of institutions into the space. There were a lot of theories around what was going to happen when you had all these institutions in, up into including, they have different types of investment mandates, so they're not going to sell, so they create a super cycle. Like that was a big popular thing for a lot of the last cycle. In fact, what you see is a greater correlation to equities by virtue of the fact that they have investment mandates that are not Bitcoin exclusive in almost all cases, and that it's a part of what makes Bitcoin an interesting type of weird inflation hedge, should that be a conviction that an institution has, is that it's also hyper liquid, right? And can actually be sold fast. And so a lot of what the dynamics of the last 6 months or so in this unwind have been is people actually discovering that of course, there's going to be more correlation because the base of holders has gotten much more correlated with regular equities holders.
You touch on a really important point that I also wanted to bring up, and that's exactly right. And from an outside point of view, but at least from someone who's been in the financial, services for almost 4 decades, I'm really wondering because we all want it. I mean, I come from the quant-based systematic trend following space, which is also a space where we've fought for decades to try and become, institutionally approved and get all that wonderful money, et cetera, et cetera. But in the case of Bitcoin, I've actually been wondering that, having that wish and all the stories that you tell that were certainly publicized a few years ago, I'm just starting to wonder whether that's the worst thing that could have happened for Bitcoin, actually. Because, first of all, let me just tell you a little bit about Paul Tudor Jones. He came from the trend following space, right? And so he's a trader in my mind. I have no idea what he's doing with his holding. But usually when you see people like that, hedge funds get into something, they buy it when they go up, when it goes up, but they're the first one to sell it when it starts to go down, because that's their mandate. They're here to make money. It's not a philosophical game for them. They have clients who expect a return at the end of the day. So they're not gonna hold an investment that drops 50% if they can avoid it. So, and you rightly said there are other types of institutional investors who have different mandates and so on and so forth. So the first conversation that Jim and I had in this series of this batch of the Global Macro series was actually with Dr. Ben Hunt. I don't know if you're familiar with him, but one of the things he talks about is this thing about Bitcoin becoming Bitcoin, right? I mean, this is this institutional acceptance, it's everywhere. And actually he thinks from a narrative point of view, which is his specialty, it's just not, I mean, it's not necessarily beneficial, because you, by becoming mainstream, you kind of give up, or you, by implication, you have to give up some of the things that are where it all started, what made it Bitcoin, and a couple of stories just to share with you, and I'm sure you're familiar with them. There was a guy recently that came out on a Twitter feed with a video, and I don't know his name, but you may know him. He's someone who bought Ether at $0.75, so less than $1. He bought it, and he carried it all the way up to $4,000. But now he sold everything at $2,500. Why? Because he said, now it's just a leverage bet on risk assets or on tech. It moves exactly as you said. It moves exactly like that. And so I'm wondering whether that's part of the conversation inside the crypto space, that maybe we've done ourselves a disservice, and even back to the kind of Michael Saylor and MicroStrategy, doing things to attract a lot of money, becoming more institutionally approved. But that obviously mean you're going to have a lot more regulation, et cetera, which, by the way, I also want to talk to you about, because you had a wonderful interview with some of the people introducing this regulation, which actually I thought was really constructive. But we'll take that in a few minutes. But anyway, back to the point about, is the fact that the Bitcoins wanted that acceptance from institutions, do you think that actually is beneficial to Bitcoin or not?
So a bunch of different pieces of this. One, I will just say, and this is as snarky as I'll let myself get, pretty fundamentally unimpressed with the founder of an Ethereum-based tokenized hedge fund deciding to keep all of the tokens in his unsuccessful hedge fund, but sell Ethereum and try to get publicity for it. Like, yeah, whatever. Like, this is a moment where lots of people are trying to make themselves feel smart and relevant again. And I pretty aggressively dismissed his take, even if the points I think are relevant. Now, Ben, I want to put on the opposite end of the spectrum of saying something very similar to someone who's in the industry. I really like Ben. Ben's been on the show twice. I think Ben is almost broken cynical at this point. I think that he has spent so much time watching power just reappropriate itself and absorb the next thing that it is nearly impossible for him to believe that things won't just get eaten. And it's sad for me. I still think he's an awesome person. I love his writings. I continue to subscribe, and I'm in the wolf pack or whatever he calls it.
Sure.
But I think that the Bitcoin TM point is worth noting and reflecting on, like what the implications really are. Because I do think it's the case that power structures are incredibly adept at absorbing into themselves the thing that would come to challenge them. This has always been the case. And so to the extent that that is happening with Bitcoin, it's a worthy thing to watch out for. Now, I think that the Bitcoiner answer to that fear is maybe to break apart questions of price and market dynamics from questions of its functionality as a store of value sort of outside of state control. Now, where Ben and that Bitcoiner would disagree is he thinks that everything gets kind of regulated into oblivion and there's no world outside of kind of the KYC Bank Secrecy Act kind of, use of Bitcoin. I actually had the last conversation that I had with Ben on the show. It was him and Alex Gladstein. And obviously Alex Gladstein from the Human Rights Foundation comes from the camp of, he doesn't really care if people in the US have to KYC to use Bitcoin, if, again, that sort of Sudanese refugee use case that I imagine. But it was, I will not say that they found common ground. It was a lot of still talking past each other, but I think it does a pretty good job of kind of reflecting the two parts of that perspective. I will say that there are Bitcoiners who are on the inside of this, who have been in Bitcoin and kind of invested in Bitcoin as their kind of primary focus for quite some time, who have also been sounding this warning for a long time. I think Caitlin Long being the best, kind of known among them. She was always sounding the alarm that these products that create synthetic versions of Bitcoin in some way undermine the market cap of Bitcoin, right? If the whole kind of premise of where sound monetary policy comes from is 21 million flat, but then you can rehypothecate through, ETFs that are cash settled and all these sort of things, then there is something fundamental there. And a lot of Bitcoiners agree with her take on that. I think I am personally closest to the Gladstein side of these things, where I feel like there are really important conversations to be had about the how these sort of forces change the market dynamics. And I think certainly I worry very much about the hero worship that Bitcoiners tend to have towards anyone who adopts Bitcoin. I think Nayib Bukele from El Salvador is my most obvious example of this. But I think that there's, again, with all things, it's so hard in this space to have a calm conversation about it, which is why I've appreciated the time I've had with you guys.
Couldn't agree more. I actually have one thing that I would disagree with you guys on, though. This idea that the adoption from institutions is somehow causing some greater downside to, or a two-sided nature to crypto. The reality is it has been a speculative investment from the beginning. And that word kind of gets people's hair up, right? But a speculative investment by definition means something that you're speculating on, something that's really not certain, right? That's very uncertain. And I think through our conversations here, we've been very clear that crypto's future is not certain. There's a lot of dreams and aspirations, and it may be something very valuable, but it very well may not be. There's no fundamental cash flow. There's no something fundamental. Now, again, we can talk about the technology and its potential use cases for business needs and to create profits. That's another kind of thing. But crypto itself is speculative by definition. And the second you have something that is speculative, people can be hodlers. They can have conviction in the speculative thing. But much like the speculation we've seen in some growth technology names that don't have profits now, that are speculative because they need time to get market share and to potentially capitalize on that down the road. Much like the liquidation we've seen there, it's not a surprise that people who have been speculating in calls and YOLOing in the tech space have also generally been, if you draw a Venn diagram, very similar retail who are, have been hodling crypto. So I think I don't think it's fair to say that the hodlers are being subjected by kind of institutions. Now, to be clear, just like any other speculative fragile asset, when liquidity comes off the table, you better believe institutions are going to find weakness and they're going to take advantage of it. That's free market economics. That's how capital markets work, right? And crypto has a lot of weaknesses. It has a lot of structural weaknesses in terms of the participants who are holding and their potential balance sheets. Also, things like Tether. And that's the next question I have for you. I've talked to a lot of people on the inside of crypto. There's a lot of talk about, if there's a major weak point in kind of the whole thing unraveling, it's Tether, right? What are your thoughts on whether we'll see a breaking of the buck in Tether and whether or not ultimately that would cause a major unwind of kind of the infrastructure that holds a lot of the crypto space together.
So there's a bunch of different questions with Tether. Tether is the longest running skepticism, both rational and irrational, that people who are outside of crypto have. And there is no doubt that things have at time been looser or not, right? And I think that you can still be sort of net not in the camp of kind of a Tether truther. And still, I mean, they settled with the NYAG for a moment in time when they didn't have their full reserves backed, right? And it's clearer and more nuanced why that is. But at the end of the day, they said one thing, they didn't do that thing. They settled the New York Attorney General around that thing. Now, in terms of Tether right now, one, we've just seen a huge number of redemptions happen very quickly. We had a week period that saw something like $10 or $12 billion worth of redemptions that actually happened. The question, of course, isn't the 12th billionth or the 15th billionth or the 20 billionth. It's like whatever billionth is actually not redeemable at the moment in the case of an actual bank run. It seems to me that Tether has seen the writing on the wall and is racing to shift things to basically all treasuries as fast as they can, or at least with post haste. You see this in how they communicate in Twitter, and this has clearly changed. The market has already started to move, though. If you look at the adoption curve of Tether versus USDC over the last year, it's quite clear, the pattern. Now, Tether still is, not quite double the size of USDC, but the gap is closing. USDC is absolutely racing to be the above board, more frequent disclosures, et cetera, et cetera. From my standpoint, as a market participant, I think that the more that we have, the closer to real-time attestation we have from third parties that are as legitimate and above board as we can, all for that. I think that any common sense stablecoin legislation is going to require versions of that. It might not be real time, but it'll be very regularly. It'll be at least monthly. It'll be maybe earlier. It'll be third parties that are not, sort of connected in any way to the firms. I don't know what the answer is if there was a kind of massive Celsius style bank run on Tether. It's kind of hard to imagine, and I'm not trying to be coy about this. It's just the level of fear in the market that it would take for that. The number of different players, I think, is so immense. The problem with Terra was that it was structurally designed. It wasn't just a bank run. It was that they designed a mousetrap that was meant to do exactly what it did, which was inflate to infinity, trying to keep the supply up. So it had this totally different type of dynamic. But, listen, stable coins are a key part of the infrastructure for this space. So
if they can break the pound, they can break Tether. I'll tell you that much. And just watch what's happening to JGBs. I mean, if the Japanese government bond's in trouble, Tether has a lot bigger risk. I'll just put that out there. But I appreciate your commentary. It's always good to hear it from somebody who's more on the inside.
Yeah, sure.
The follow-up to that, if we are to see a real liquidation from here, and we've already seen an immense liquidation in crypto. But let's imagine a scenario where Bitcoin trades back down to 2,000. Okay. And relatively, in the next 6 months. We had Peter Atwater on the show recently, and in his words, crypto risks becoming an enormous betrayal, right, to the people who believed in it. It again, pull back on that populism thread, it is an embodiment of populism, of a freedom, a distrust of government, and it was a hope, right, that helped kind of shelter some of that anger, helped give some meaning to those that have, not been able to catch up for many, many years. Do you believe, and this is kind of shifting back to macro, that some of that anger will somehow, and that disillusionment will ultimately filter into the broader macro market? I think there is a risk of a Bitcoin or broadly crypto liquidation creating more anger among a younger generation, particularly at a time when that populist impulse is already, gaining steam. Love to hear your thoughts on that.
So I think that I generally feel that the it's not that I don't believe that there is this sort of economic cynicism and frustration. I think much more of it lives outside of crypto and even meme stocks than lives inside of it. I think that it is largely I mean, listen, I think that to the extent that there are kind of left and right phenomena in the US, I think there is an entire left side of this phenomenon in terms of that economic disillusionment that has nothing to do with crypto, that hates crypto because of its environmental footprint and never touched it. And they seem to me to be much angrier than the people who are kind of in the crypto space, in the meme stock space. Now, there's maybe a shared kind of context for it, but I don't know. I overstated isn't the right word to describe how I feel about this frustration, but I think it's a lot more nuanced than sort of just market participants. In fact, I'm much more worried about the non-market participants, frankly, than I am about the people who have gotten in. So that's one part of my answer. The second piece is, I think it's a good question. I think that we should let me put it in different terms. In the same way that I believe that it's a legitimate question to ask about systemic risk from crypto flowing into traditional finance, which I do. I think that the way that we ask that is often stupid. I think that it's mostly, to me, that's a question of the opacity of hedge funds and family offices. And the problem isn't that crypto is volatile. The problem is that we don't have a good sense of how crypto market exposure is going to impact other types of exposure, right? Like Archegos wasn't a problem because of the particular stocks in question. It was an opacity problem. It was a problem of prime brokers who didn't know how many different times Huang was leveraged, right? And so I think that it's an important question to ask, though, hopefully the right way. I also agree that it's an important thing when we're looking at kind of sociological phenomena that are going to shape generational attitudes and narratives. There's no reason not to, it's important to ask that question. I think that if you look at the average market entrance, a lot of that capitulation has already happened, right? Like the average sort of, we're down at 20,000 again. We hit 20,000 in December of 2020. And it's certainly possible that some of the GME folks started to get into crypto and push it up, in that 6-month prior period. But I think that a lot of the sort of the full push in happened in the sort of December, 2020, after it broke that kind of $20,000 psychological barrier up to the highs, and then again when it kind of climaxed in last fall. So I think that a lot of that has already happened, and so maybe the question is are we seeing signs of that already, with people sort of abandoning crypto, being frustrated with crypto, that translating into other kind of parts of their portfolio? And I don't know. I mean, I haven't seen that, but it's a reasonable thing to ask.
I mean, we touched on it earlier, and obviously part of becoming more accepted is this whole thing about regulation. And I don't know. I don't know if this is a way for the old economy to try and control and maybe eliminate the crypto space. But of course, regulation is coming. And I was listening and enjoyed your conversation recently with Senator Loomis and Gillibrand, who are introducing this Responsible Financial Innovation Act. A couple of things. Obviously, I'm curious to hear your opinion about sort of some of the main pros and cons that you see from the inside. But one thing that is, again, maybe I'm coming back to it once again, but with regulation comes certain things you can't do. And sitting on slightly the outside, but being inside the financial world, I do feel, and maybe that's also what you were referring to, Nathaniel, in terms of, there have been some of these crypto evangelists that have turned into rock stars that have big platforms. And in my opinion, the way they have talked about it and the promises they have made and the life-changing opportunities and all the words that they have used, to me, is very, very similar to pumping something that they benefit from pumping. but it's not just in crypto. I mean, what Kathy Wood is doing in her space is equally crazy, in my opinion. And I have no idea why regulators don't come down hard on her 50% promises of annualized returns going forward and what have you. So how do you see all of this play out? Because coming back to the point about anger, I mean, not that I spend a lot of time looking into the crypto people's Twitter feeds, but I did do a little bit of looking into for our conversation today. And some of these people, and I don't need to name them, I think we all know who have big platforms and who have been pumping, let's call it that. Their Twitter feeds have become quite the sight, and it's not pretty, and people are angry, and so on and so forth. So I'm just, again, interested in how does this all end up, and how does it impact, from your point of view, the crypto world? If we're going to have regulation, let's have it, but then let's also enforce it. Otherwise, there's no point in having it in the first place. And I come from a world, and Jim comes from a world where we can't even talk about our own performance, even though it's audited and it's what have you. We can't mention it, right? So imagine what our Twitter feeds look like. They're pretty boring compared with the crypto space, right? So I'm just curious how you see all of this from where you sit.
Sure. Let's start with the regulation side. I think that the Responsible Financial Innovation Act is a really great starting point for the discussion. And that's what it is, right? They are, the difference is that Senators Lummis and Gillibrand are actually intent on kind of pushing this and having this conversation, versus a lot of the different versions of this that we've seen in the past are really just flyers for someone to kind of flag that they care about the industry and whatever. Like my impression is that they maybe not, they're going to be real to the realities of pre-midterm election politics and what they can and can't focus on. But I don't expect it to go nowhere, even if it ends up being kind of pushed into lots of different kind of smaller bills. I think that it's a great start to the conversation. I mean, I think, the fact that they're dealing head on with how they see a potential different path for these things that are security-like and commodities-like. Who knows if their sort of idea of an ancillary asset will pass muster. Certainly, I don't think the SEC is going to let that one go without a fight. But at least it's a conversation that doesn't just say, hey, we should have a conversation about this. It offers something that lawyers who are qualified can debate and discuss and kind of push forward on. So, I think in general, it's a really kind of positive starting place for the industry. When it comes to what regulation won't allow that happens now, a lot of the fights that people who are sort of against regulation as a whole want to have are fights that aren't going to be just about Bitcoin. It's about the entire AML regime. I mean, that's really the implications. Like, if you want to be able to use a financial asset that's not cash without KYC compliance, you are going after the Bank Secrecy Act. Now, that's a conversation that is totally reasonable to have in terms of how effective the Bank Secrecy Act has been, and whether there are other versions, and what the implications of for financial privacy are, and how these kind of new types of approaches hit it. And there's certainly a lot of nuance in terms of how it's applied with these new assets. Like, a lot of the debates are going to be around very specific minutia of threshold limits and reporting approaches. And it's not an accident that last year, the big thing that kind of flared up the fight in Washington around crypto was a provision around redefining broker and what it meant for non-custodial systems, right? These are kind of nuanced areas. There's going to be a lot of that. But I think in general, regulation is, we're living in a world where we are, if you're like a rational business person, you're complying with what seems to be your best guess at regulations, or the best guess of the regulations of the financial institutions that you're interacting with. It's a lot better to be complying with actual regulations that have been defined than doing your best guess at these things, and a lot of there is still a lot of gray area, as much as some folks would like to say that there isn't. So I think it's a net positive. I also think that when it comes to the kind of life finds a way approaches that I was talking with you guys about earlier in terms of, Bitcoin being a way for people to help kind of smuggle their goods and stuff. I'm not particularly worried about whether they have the easiest on and off ramps, based on a US regulated exchange. That's a whole separate set of considerations. So I think that for mainstream usage in the US of digital assets as, kind of internet native money technology and value store that can be programmed into other things, let's figure this sort of stuff out. When it comes to the shillers and the pumpers, I mean, you're talking to a guy who literally talks about this stuff every day. And I will take the Pepsi challenge on people finding anything across any one of the, 800 shows that I've done that even comes close to pumping something, right? I talk admiringly about Bitcoin and its use case in these types of kind of markets frequently, but that has nothing to do with the price, right? And it never does. So I bring that up not to pat myself on the back, but just to give you guys a sense of what I feel about that sort of things. I think NFTs are fun. I think they're interesting. I think they're really cool salvo in a kind of different way to look at creator economies. I won't even tweet about an NFT that I own or buy because it feels too close to pump. Just inherently, I have 50,000 followers. It's inherently pumping it, even if I'm just like, this is cool. You know what I mean? And it's more than just disclosures. It's just kind of obvious to me. So I don't know if regulation guts that whole side of the market, fine, whatever, let them die. I don't care. It's ridiculous, So I think bad stuff getting cleaned up is never really a problem. It's when good stuff gets swept up in the bad stuff too, and that's the line that's always hard to tread.
Yeah, no, that's very true. I know we've already kept you for 75 minutes, but I have a feeling that we both have a few more questions, if you don't mind, because this is not one of our usual topics, but it's so interesting to talk to someone who's from the inside and really knows what's going on. So if you don't mind, if we can keep going for a little while longer. One thing I wanted to ask you, Nathaniel, is that just on that point. So if I take a little bit maybe the other side of the argument here, I heard Michael Saylor come out arguing that you have these 19,000 different cryptocurrencies and digital tokens in circulations, and they're all kind of unregistered securities that can't be linked to a hard asset like Bitcoin. And he argues that Bitcoin actually is just getting caught up in all this crossfire at the moment of this collapsing crypto market, because a lot of it is often used for margin loans and so on and so forth. I mean, is that a fair argument? I mean, could be or not. What are your thoughts?
I think it's pretty clear based on kind of what I've said that I do think that Bitcoin has a different role and a different level of maturity and product market fit, let's call it, in a lot of situations. Yeah. I think that the Bitcoiner dismissal of everything else is, on the one hand, understandable in terms of there really being a functional difference in how things were launched and how they've evolved. I think it is reasonable in terms of recognizing that a lot of these things that say they're decentralized actually have, kind of a leadership structure. I think it's reasonable in the sense of just kind of understanding that there's a different dynamic. But I also think that it's a PTSD hangover of a decade of defending Bitcoin and constantly fighting, and in particular, the block size wars and the fight against Bitcoin and Bitcoin Cash. And I think that there is a real, I don't know. I tend to think that Bitcoin needs Bitcoiners to defend it a lot less than a lot of other Bitcoiners think that it needs to be defended. And I would say only that if you look at, for example, the Responsible Financial Innovation Act and the people who are in Congress and the Senate who are looking at these issues, they get that there are differences and nuances to these things. They are no longer in the mode where a thing that was, created yesterday and promises 20% returns is being lumped together with a thing that was built 12 years ago and has no, functional leadership. So I don't know. I tend to worry about it a lot less. And I think that I don't know, to the extent that there is a confluence or these things being caught up, it's much more in media than it is with anyone with power in government. So I'm, like I said, I guess I'm less worried than some folks are.
Jim, do you have a final question or two?
Well, I just wanted to say one thing about this earlier thread that you guys were kind of pulling on, which is the decentralized nature of crypto, the libertarian nature, if you will, creates a situation where you don't have regulation, you don't have, if you have a bit of a lawlessness, that is actually sometimes the worst, usually, much like in nature, the worst case for the weak, right? That is a situation where the powerful or, those that can manipulate and can move things around will take advantage of it. That's chaos, right? There's essentially a choice always between, do you trust an entity, whether it's a government or sovereign or, whatever it is, to apply force, to control and put laws around so there's more fairness. But at the end of the day, you're giving up some level of control to this government. Or do you allow, the world to just feast upon itself and to make its own rules? And in crypto, it's feasting upon itself. And it's not one set of, it's not like Bitcoin believers are one. There's a majority of people who are speculating and believing in it, but then there's all this other part which are profiting from it. And really, there is a dirty underbelly because it is chaotic, because there is no regulation. And I think that will drive this great disappointment that of the masses that have believed on it, because it's feasting on itself to a large regard. So I think that's an important regulation. And this is why you get this debate internally. Is regulation good for crypto? Is it bad? People want the freedom from government. This is a bigger, question throughout life. People want government, but they don't want government, right? They want laws and they want regulation, but then government controls them, and then they don't want that, right? It's the human condition. And I think, crypto is very much embodying that, and we're seeing the kind of the ugly underbelly of lawlessness and freedom, if you will, but a freedom where, a libertarian freedom, where things are not really as free as people hope. And I think that's a kind of an important takeaway.
Not to end on a disagreement, but that sounds like an important takeaway for you. I think that there is certainly a part of that, but you continue to characterize this entire space as libertarian, which is not true. I mean, look at which government regulators are interested and why. You have as many Democrats who are coming from underserved areas who are adopting this technology faster than traditional kind of white majority areas that are exploring it. So you also have the entire smart contract space is average left. Also, I've looked at all of the studies of user bases of exchanges. They tend more Democrat than Republican. So that's one thing. Is sort of you have this meme of it as libertarian. You also have a meme of it as unregulated. Explain to me what unregulated means. Do people not pay taxes on their crypto? Do they not have to deal with institutions that are regulated? There are questions, big holes in the regulatory area, but I would challenge you to get out of the soundbite mode a little bit, because a lot of the points that you've made today have been pretty just, you're bringing a story and a narrative that you have of it, which is fine. I love being here talking through that with you, but I would push a little bit on that.
To be clear, when I say libertarian, I'm not talking political, and maybe that's a semantic issue here. I mean a lack of law. That would be a lack of regulation, which is what that libertarian kind of ideal is about. I'm not talking Democrat, Republican, all that stuff is the same anyway. This is not a political argument at all. So that's not at all what was intended. But I do, it's simply the ideal of what crypto and kind of this freedom and populism that it represents is really kind of what I'm talking about. And it isn't regulated. That's there are taxes paid now. There weren't for a long time. There is increasingly marginal regulation, but I think it's fair to say the rise of crypto has largely been, other than, again, I think we agree on the technology and the blockchain, its efficacy as a technology. Okay. And I get your point from before about the funding of that in almost like a stock type way that cryptocurrencies, the role that plays, fine. But this idea that as a monetary phenomenon, right, The monetary phenomenon is about wresting control from government and a freedom from the control of government. And that's the part that I'm pushing back on in terms of libertarianism.
Any final thoughts, Nathaniel? I don't mind that you two don't agree on everything here, because it gives us a good opportunity to invite NLW back and see how the story continues. But what I do want to ask you, maybe towards the end here, Nathaniel, and that is, there are so many things we could have talked about. There's so many things going on right now. It's impossible to keep up. You do a fantastic job keeping up with all of that. So my final question to you is, what should we have asked you in the last 75 minutes? What did we miss in all of these things going on that you actually think is so important that we do need to spend a minute on that before we end?
No, you did great. Even this last question, let's leave it as a question instead of a disagreement. It's what is... these are talk about big picture power shifts, the role of government, which power structures we want to be beholden to, which ones that are explicit, i.e. government, versus implicit, i.e. business structures, right? That's a different way to frame the conversation of big tech. And I do believe that to the extent that crypto offers something different, either on the governmental front or the big tech front, it can't shirk from these questions, right? It has to find sort of its answers that are borne out in reality, right? So it shouldn't be scary to ask them. So I listen, I think the conversation has been great, and it'd be weird if we agreed about everything all the time, and I think having more places to disagree civilly, is a really important thing. So I appreciate the time, guys.
Absolutely. And really, Nathaniel, thank you so much for the time you spent with us today. You really are a deep thinker, and you represent the space, amazingly. So we appreciate that. And as I'm sure all our listeners do. And by the way, make sure you check out Nathaniel's podcast, The Breakdown, and follow Nathaniel's Twitter feed, because as you can tell from today's conversation, we are living in a true global macro-driven world, and it is perhaps more important than ever before to stay well-informed. From Jem and I, thank you so much for listening, and we look forward to being back with you as we continue our Global Macro series. And in the meantime, take care of yourself and take care of each other.
Thanks for listening to Top Traders Unplugged. If you feel you learned something of value from today's episode, the best way to stay updated is to go on over to iTunes and subscribe to the show so that you'll be sure to get all the new episodes as they're released. We have some amazing guests lined up for you, and to ensure our show continues to grow, please leave us an honest rating and review in iTunes. It only takes a minute, and it's the best way to show us you love the podcast. We'll see you next time on Top Traders Unplugged.